Since COVID, working from home is going to be a thing of the future. I think many people started to like working from home. Now, after COVID, we might be faced with some inflation or recession. It'll be very important to be able to serve and sell your services online. I'd like to talk about a software platform that allows you to do just that. Sell your services. It's called FVRR. But before we get into that, I want to remind you that Stock Planner channel is an education channel, and we try to learn new things concerning swing trading or swing traders, catching the peaks and valleys of a stock price movement. It's important to learn that and do your own due diligence, because I'm not your advisor and you're responsible for your trades. Let's get on to it. As a swing trader, we try to get these tops and bottoms and make some money. This is a zigzag. It's not an indicator at all. It's just drawing lines, and it repaints itself and looks to the future. But I do use the MACD, and I like to see the MACD when it's very deep in its delta, and here it's deep below the zero line and deep above the zero line. And then I like it when the stochastic comes around and the RSI 4 comes around all at the same time. It gives me a nice clear signal. Likewise, when the stochastic RSI is below the 20, comes back around. Below the 30 for the RSI, comes back around. That gives me a nice clear signal. Whether you take these or not, it's up to you. I deemed them a little close. This would have been a good one if you didn't think it was too close. But right now we have a RSI below the 30. We have a stochastics RSI below the 20. And we have the MACD that's deep, real deep. And we had two successful ones, and will it go up? And I think we have to look at this. Let's look at this article here. 3 stocks to avoid. Before we go, I want to say that this gap down based on earnings, and the earnings weren't good. Normally, a strong stock, after earnings, you have an overreaction, and then the gap tends to fill. I'm not positive it's going to happen in this case. 3 stocks to avoid after releasing disappointing earnings reports. Etsy, Fastly, and I believe eBay is as well as on this as well. Not on this list, but I believe that you can consider eBay to be disappointing. And I think I knew this, but it's good to remind. FVRR is located in Israel. I think I knew that. It connects businesses and people. You do tasks. You can sell your services. In the second quarter that just ended, revenue increased by 10%. Operating loss for the quarter increased as well. Net loss. FVRR's revenue is expected to increase by 30%. That's good. However, its EPS share is expected to decline by 92%. That's not good. Recently, the stock has lost 30%, if you remember the chart, and it's still losing after its earning report. According to this article, FVRR is weak, and it's weak in the areas of growth and momentum. This is support. You could say this is resistance, and this is the 50%. Normally, when you're sitting down here, I would always, after a big gap like that, I would say that this 50% would fill in about 45 days. Now, based on this, I think this is a thing that's going to hover around 200 and 152, somewhere in here for the next month. It's not going to move much. So if I could set some kind of iron condor to be 152 and 200 iron condor as an eye, I think this is a play. It's a nothing play. Swing down, and we're not going to play the momentum. We're just going to play that it hangs around the bottom part of the swing for a while. Let's see how that looks. 152 and 200. Going to a program called Option Strat. I type in my symbol. I selected an iron condor. At first I checked the iron butterfly, but my spread wasn't big enough. I select the wings, 155 and 50. That's a 5-point spread. That's $500 it'll take to put this trade on. $500. And as long as I stay above 152, I'm going to be good. So that side is good. The other wing, we want to around 200. And after 200, this goes to $10 wide. And I didn't want to spend $1,000 on this So I brought it down to 95 and 200, which gives me about 197.50, about halfway. So I'm not quite at 200, but I'm at 197.45. It's close enough. I'm receiving $245, and my max loss is $255. This trade expires on the September 17th. So if it is between, the stock price is between these two numbers, 152 and 197.50, I get to keep my credit. Now I can close this out earlier. If it hangs around the middle, currently trading at 178, but currently hangs around 178, in about 10 days, I could close this out for $33. And $33 on a $500 investment is about 6%. Cool. If it goes and fills the gap, I could take a loss of, say, $60. But I'm saying it's going to hang. What do you think? This is about a 1-for-1 trade. In options, that's not bad. Do you think fiber is going to move much? Do you think it's going to fill the gap? As long as it stays in between here, till about here, I'm going to have $255. What do you think? Does trading iron condors interest you? Anyway, check out TradingView. It's free. Check out Option Strat. It's free. Do your own due diligence. Learn this stuff, and you'll be set for life. Happy trading. Catch you on the zip.